All right, so when it comes to developing a great trading strategy, it takes time and lots of work. I mean, going back, testing the charts, going back in time and history, and basically doing a lot of market replay, and also testing it into the when you're forward testing it and when the market is actually open. All right, and I highly recommend anyone out there who's watching this to demo and simulation, go into simulation for a period of time to show that your consistency. Do not just start dropping a lot of money into a personal account. All right, thinking that because you have the capital that you're going to be able to be successful. You may get lucky a few times, but then you're going to get washed out. Okay, you're going to start blowing multiple accounts, and then you're never going to want to attempt to even try to trade again. Now, here on the channel, my channel, I basically share with you, I don't want to say teach, but share with you what I feel is the most accurate and best way to actually trade, all surrounding market structure first and foremost, understanding which way to trade, because you have to understand which way the market is moving to be able to trade, and then followed up with price action, being able to determine which levels that kind of make sense based surrounding all around structure of the market. Okay, so if we're bullish to the upside, constantly breaking structure, taking out highs, you should always be looking to do what? Take demand setups, high probability ones at that. Or if we are reversing to the downside, you should be looking for opportunities to go short. Okay, now there are situations where the market may like it's reversing, where it makes a lower high breaking structure here, but then it turns back around and we start re-breaking structure back to the upside. In this situation, this is a major high right here, and most times what I tell people is to wait to the major area of structure to be taken out to the upside. But as you can see, the market actually broke structure here and came back to this area here, which set itself up for a beautiful area of demand. And by now you should know what demand and supply is. If not, please spend some time watching the video content here on the channel, or if you want to also become an elite or an ultra elite member, which I'll share at the latter portion of this video, that is where the cornerstone, the bread and butter to how I actually trade every single day lies. Okay, and it's very inexpensive for anyone that wants to join. We have plenty of supporters that are part of that community, that private community filled with tons of video content that can help you in your own personal trading. Now, what I like to do, okay, is to look for high probability setups surrounding, again, like in which way the market is actually moving. Now, it took me time. I'm gonna tell you, the first 2 years, I say this all the time, I wasn't successful until I had to go to naked charts and understand, what I was looking at. All right, I was just trading lots of times, based and surrounding around indicators, which I soon found out that they lag, and trying to trust an indicator, is not the best thing to do. Trading without indicators will definitely work in your favor. Now, I'm not saying some indicators, don't help you out in your personal trading, but I feel like trading price action based on a naked chart, you can actually get a feel of the flow of the market and see where the significant buying and selling is taking place at. All right. So when it comes to scalping like the index futures or any particular market it doesn't matter. Okay, and what I'm trying to say is that it doesn't matter if you're trading the indices or some means of a commodity like gold or oil or one of the metals, grains, whatever it may be. This strategy, which I'm going to share with you right quick, is probably one of the best ones that I've ever come across, and I watch other people's channels as well, but I'm telling you right now, I spent time developing this and for myself. Okay, not something that I thought that I would ever share with a group or community of people. But let me stop rambling and just jump right into this, okay? Because I know everyone wants to know, well, what is the strategy? What is the strategy? Okay, I feel it's the best one on the internet. Okay, everybody can say that, right? But to me, it is, because I'm profitable and making money doing this. But what I want to see first and foremost is just basically which way the market is moving. If we're making higher highs and higher lows to the upside, breaking structure consistently, then I'm looking for pullbacks to key areas of demand. All right. Now, this is the turning point in the market here, but still, the market can still swing back around and start breaking structure to the upside. So basically, I'm looking for key areas of aggressive areas where the market is pushing to the upside with lots of force, okay, or to the downside. That lets me know that these areas in which the market is really, say if we're in a bit of consolidation in an area and then it blasts to the upside, I know that's the banks and the institutions more than likely making those type of positions or entering those orders to push the market higher, in which, like right here, they took out structure above these highs here. So I would wait I would mark up this area here on my higher range chart, first and foremost, my 120 range, and then I'll simply wait for it to come back on my lower range chart, which I'll show you here in a moment, how we can execute and get into the trade as well. So when the market retraces back to this zone right here, which is a high probability demand zone that broke structure going higher, all right? Now, if you were betting on taking a trade, say like right here, okay, or maybe even right here, this zone, you can see that it react right here going short. If you were betting on this one right here, this is a low probability setup, okay? And if you're not sure what's the difference between low probability versus high probability when it comes to supply and demand setups, please spend some time watching the videos here on this channel. You can even go to the homepage and use the search tool to query any particular topic that you're interested in, and I'm sure you're going to find some video content on my channel. Now, as the market pushed up to the upside here, we broke structure here. Now we have two areas of demand resting back. All right. And I tell people this all the time. You have to size up a leg. Where did the move start from? It started right here. The first push, pull back. They pushed higher. They came back. So they did a bit of consolidation before it pushed to the upside. This is the origination point where most of the buying took place to break this area of structure pushing higher. So when the market starts to come back down, I'm not saying that this area won't hold, but this one makes more sense right here. For one, you know, we're coming back to the downside here, down here where the move started from. So I'll be more interested in this area right here. Okay. When it gets there, we're basically moving down to a lower range chart or whatever time period chart you may trade. If you're trading time-based charts, tick volume, whatever it may be. And then we're moving down. So let's move down. For me, it's going to be my 24 range. This big or large rectangle box there, what you're looking for or at right there, that is that 120 range, higher range demand zone. From there, what I'm doing once I scale down to my 24 range chart, it's just basically looking for either a zone, you know, back at on the inside, meaning the zone within the zone approach, where I mark up my higher base zone first, wait for the market to retrace back to it, look at my 24 to see if there is a 24 range demand zone resting on the inside of the larger zone. If not, then what I'll do is I'll look for the market to break structure, pushing to the upside, high, higher, low, pushing up, breaking a bit of structure here. But we also have where it is breaking structure right here. So then we get this clean pullback to this small area of demand, which I'll mark for you right here. Right here, aggressive buying to the upside off the lower range chart. This is where I'm going to go long at, okay? Because we're in that relative area of the higher range demand zone, which I showed you on the larger chart right here. Lots of buying. When it comes back to it, when we're looking over our entry chart, which is right here, taps into it, wait for the breaker structure to happen, meaning the turn in the direction of the market on the lower range chart, pulls back, bit of demand here. Comes back to that area here on the 24 range, and then we can go long from there. And I'm going to show you here an example. So that was the long entry there. Your stop loss for me, is once the market pulls back to that newly formed demand zone on the higher range chart, it's going to go on the back end here at 23,877. I always give myself 3 or 4 points breathing room right there. And then we're going to aim for like gaps to be filled to the upside, or maybe a recent high that was just made like right here. Even though we want to be able to collect more. I talked about that in the a recent video, which was just yesterday, about how to trail behind price when using a stop loss, okay, a trailing stop loss strategy, right? But if we look at the higher range chart, when it comes back here, we can aim for these highs to be, back up here, but definitely these gaps on these imbalances in between these candles back to the upside right here, okay? So reject it here. We can aim for this to be filled back to the hopefully back to the upside there. And as you can see, that's where it goes to. It's to fill all the way back up to 943. Well, actually higher than that, 977. Okay. I think 943 was right here in this area here. It pulled back and then it broke higher again. All right. So that's a demand setup right there. Very simple strategy. But again, you need to understand the most important concept, which is market structure. Now, an example of a supply setup. All right. So when the market came back here, it didn't break this high here. What it did was it then made a lower high, came back down and broke structure below this low here. So it broke structure already. As you see, it made a low, lower high, breaking here, structure, pulls back, or as it, when I pull back here, it broke above here. So we're kind of moving sideways right here. And so at that point there, we're looking for the market to do what? To either take out the high if you want to wait for a major area structure to be taken out, or this major low right here. It comes down and breaks that major low right there. And then we got to pull back to this key area of supply right here, okay? So I'm going to show you that example right quick. We'll go over to that area here on the lower chart, which is right here. I believe it is. Make sure. Yeah, right here. Okay, so this was around about 10:16, 10:17 Eastern time. Market comes down, breaks structure, retraces back to this area here on the higher range chart. High probability supply zone with the imbalance or gap. That's what makes it high probability. Taps into that zone. We can see this area here where it kind of consolidated, and then you got a aggressive force to the downside. To me, that's the banks and institutions making a big push like that. Excuse me, after consolidating in this little area here, or this zone here, and then it breaks below these lows right here, breaking structure. So when it retraces back, as we wait for the retracement, which was on the lower range chart, taps into it. Now at this point here, you can actually go short off of this supply zone right here on the 24 range, because it comes up there and taps into it. So on the retracement, as it taps into the higher range zone, there's a imbalance, small imbalance resting right here where the supply area is on the 24 range chart. Okay, right here. All right, it taps right into it. Or if you didn't catch that, you can wait for more structure to be, or new structure to be broken to the downside in the 24 range. Low, lower, high, breaking structure below these lows, pulls back. High probability supply area on just created, newly formed on the 24 range, and you go short from there. And if you go short back at this 24 range supply zone, then you get in right here at the 860, and you're aiming for the low right here at 846. And then the market comes back and retraces back. So maybe you took most of your positions off right there. If it comes back, as the market is moving into profit, you can move your stop loss down to protect your trade. And but if it comes back up here and stops you out, what does it do? It's going back up there just to test that high, and then there's a massive sell-off right there to the downside. As you can see from this area right here, it comes down and runs that low right there. This is a beautiful area of supply right here. Aggressive selling right here. It broke this structure here, pulls back, and it breaks more structure right there. So again, when you're scalping off the 24 range, you can aim for lows. In this case here, there were some gaps that need to be filled, but not immediately following after this low right here. If you waited for the break here and weren't expecting it to push lower, there were some areas where the market could hold up in this area right here. And then there were some gaps that need to be filled. But what they did was they came down and broke that low there, which you could have took profit on. It came back up. If you didn't, then it stopped you out, and then it came back down. So they were looking and searching for stop orders after running this area of this low here to go back to the upside, stopping sell orders. People started selling right here. But yeah, this is a beautiful setup. Pull back 24 range, supply area, get in here around about 860 and take your profit down here to 846. You pick yourself up about 12, 14 points real quick on a lower range chart. That's called scalping. All right. So this is the way I do it each and every day. If you missed that opportunity, it kicked off another one right here. It came back, broke structure again, below this low here, pulls back, nothing there. Actually, let's see. Did it tap that one there? No, about a tick or two. Comes back down here, slight break of structure here, beautiful area of supply created right here. Go short from that area of supplies. High probability again off the 24 range, and go short. Okay, so we're just looking for pullbacks where it's breaking structure, coming off of that high probability supply area on the higher range chart, and look for the market where it's swinging lower each time it breaks structure, pulls back, go short. Okay, and just be mindful what's below you. I tell people that all the time. If you're looking to go short in this area, just be mindful that area is just low right here. And more like it could definitely try excuse me, what I'm trying to say. Try to run that low there. We have, liquidity resting here, these equal lows right here. So it's probably going to want to run that low right there. But yeah, this is how I do it each and every day. Again, it took me time to kind of perfect this strategy. And, I've just been sharing this on the channel, on my platform here on YouTube for years now. So if you're a first time viewer, you may want to spend some time watching the video content. It's very simple to actually understand, and you may want to become either an elite or an ultra elite. Let me explain that right quick. If you want to become an elite member, what you're receiving is basically the cornerstone to how I actually trade. It's not a course. It's no mentorship. What I provide are video series or content that explain to you or describe trades that I've actually taken. So you get my trade breakdowns. That's where I go into detail about setups that I post over on the Discord. The Discord is free. That link is down in the description portion of the video. The first link. Come over and join us. It's free. Now, from there, you'll see on the trading floor, that's where I post my screenshots of my trades, as well as other fellow members that are part of the community of the Discord. Then I'll go in and I'll break my trades down so that you can grasp an understanding of the setups and why I took those trades. I mean, I really give you a detailed understanding of why I took the trades in reference to market structure and price action. I'll go over that, but also about stop loss placement and where I'm taking profit at, so you can understand why I taking profit, where at the areas in which I'm taking profit from, and why I enter those trades. You also receive the video playlist, which is a series or links of videos to content on the channel that I feel is some of the most important videos to actually watch, as well as the great, I think it's about 45, 50-minute long market structure video, okay, for anyone that's struggling with that concept as well. Now, if you want to become an elite member, very inexpensive. The link is down in the description. It's titled Ultra Elite Supporter. Once you click on it, give it a few seconds. A couple tiers will pop up. You'll see the Elite Supporter and then the Ultra Elite Supporter. You can choose either one of those. I just discussed the perks and rewards for becoming an elite member. If you want to become an ultra elite member, you receive everything I just discussed, plus the live recorded trading sessions where I record in my sessions, not every single day, but a few times a week. And I go into detail about what the market's looking like, why I'm entering trades. You'll see me take trades, and I'll explain to you in detail about those trades within those videos. So you receive those live recorded trading sessions and market recap videos. So if you want to become an ultra elite, that's one tier above the elite. So all you have to do is go down to the description portion of the video, click that link, and sign up if you want to, if you choose to. Okay. Outside of that, I appreciate everyone that takes the time to watch the video content. A lot of you are always coming to the Discord or DMing me, sending me messages, letting me know that you really appreciate the content that I'm putting out. I'm doing this for a reason, because I want to see people become consistent and profitable. So if you want to and you choose to, please do your homework and spend time learning the markets, understanding them. Definitely understanding number one concept, which is market structure. All right. But yeah, if you haven't already subscribed to the channel, please take the time to go ahead and sub by clicking that sub button down below. Make sure to turn on your post notifications by clicking the bell. And last but not least, please drop a like on the channel. Leave me a thumbs up on the video and any video on the channel that you actually watch. All right. Take care. I'll see everyone in the next one.